Hello, everyone. Welcome to this month's Coffee and Real Estate live chat. I have just kicked off the pre-show. If you're already here, thank you very much for showing up. The 15 minutes ahead of time is really just to make sure everything's working. However, it's also an opportunity for us to potentially talk about anything and everything that you want to chat about. Lots of stuff going on in the world. Some recent news about decoupling buyer's agent compensation from listing agreements that we have with sellers. I wouldn't mind getting your thoughts on that. I actually think that the way it works now is actually the best for buyers. I actually think it also works well for sellers. We'll see how this pans out. I mean, it amazes me that we've gone how many decades with things the way they are, and I'm definitely not someone who says, well, we've always done it that way, so we should continue to do it that way. But I don't think that this results in better things for buyers and sellers. So I'm not real sure where the win is here. But I guess we'll see. Right? We'll see what kind of rules and regulations come out of this. What we're going to do now is just really quickly check in. It looks like, all right, we'll see how we're doing on YouTube. And there we go. We are definitely streaming on YouTube. So for all my YouTube folks, welcome to it. We'll take a look at LinkedIn, which has historically been horrible with this stuff. And there it is. It's there. Wow, I think that's the first time the LinkedIn one has worked correctly. Let's see how things look on Twitter. It's loading. It's trying. So I'd love to hear how 2023 went for everyone. Obviously, this isn't the first stream of the year, but I'd love to find out what kind of goals have folks set, whether it's for real estate or not, or just things you want to do. Do you want to get your first house? What do you want to do? Yeah, and for some reason X just doesn't want to load. It's just giving me that bar with no video. Let me just go to my profile page and see what I can see. Well, there it is. It shows up when I go there. There it is. All right, so we're all good. So here's the good news for everybody. If I believe the only two places that you can comment where I can see it are going to be Facebook and YouTube. It says it's read only. So you won't be able to talk to me on LinkedIn or X, but you will be able to talk to me on YouTube and Facebook. So just a heads up, just so y'all know, and I have windows set up so that I can hopefully see all of that stuff. So feel free to head over to either one of those venues. I am still looking for a solution that'll blend all the chats from all the various platforms, but so far, no dice. I hope you've all brought your favorite brand of coffee. I'm still not a straight-up coffee guy. I'm still the mocha guy, which I guess is fine. Let's see here. We've got some very interesting numbers to cover for kind of the southern Silicon Valley, which is really sort of we hit the soft, chewy center of the county, right? So we start with county numbers, then we go down to San Jose, and we hit San Jose because San Jose is simply the largest geographical area within Santa Clara County. So one thing about data, right? The bigger the sample size, the better you can rely on that data. So that's why we hit San Jose next. Then we do Morgan Hill, simply because Morgan Hill is one of my favorite cities. We're going to see some very interesting numbers from Morgan Hill this month. And then I would hit Gilroy, just because that's sort of the southern. I think in terms of people shopping for the best housing deal, it's a good way to measure it. So if you start in downtown San Jose and sort of go out from there in San Jose, there are you can cross a street in San Jose and have the market completely change, right? Whether it's a buyer's market or a seller's market. And yes, there are some neighborhoods where it's a buyer's market. And then as you head south, you kind of get an interesting dichotomy. Morgan Hill tends to be a little bit higher priced, and even that varies from time to time, but it often is higher priced. And then Gilroy tends to be a community that represents some great bang for the buck in terms of how much you spend versus how much house you get. And that's never been more obvious than during this time of high interest rates for mortgage loans. So we're going to talk about that. We can also talk about where mortgage rates are at. I usually save that for the end. I'm sort of looking at whatever headlines may have come out just in the last day to see if there's anything interesting. I've also got some good, just general real estate data pages I can share with you. And I try to keep it to stuff that doesn't cost you money. Now, I've got one that I use every month that does cost money, and I'm happy to share that with you. But I try to keep it down to things so that if you want to go and double check these numbers yourself, you don't need to pay a subscription fee to go and do it. So let's see here. Mortgage applications decreased in the most recent week. I think you're going to be surprised to see if you compare that with what we're seeing in terms of sales numbers for the county. I think that'll kind of surprise you a little bit. But if you'd like to ask any questions or suggest a topic, right? Is there something you'd like to talk about in today's live stream that I might not have ended up talking about? I would be happy to do that. I'd also like to welcome the folks from my meetup group. I got kind of a nice little uptick in the total number of people subscribing there. So if you're watching from being invited through the meetup, glad to see you here. Feel free to submit any questions. And again, in the meetup group for the Coffee and Real Estate, you can ask questions there, and I'll roll those into the next episode of the live chat. So feel free to ask questions there as well if you miss the show. And that's another thing that tends to be true. The folks who watch this after, right, who watch the stream of it, who watch the replay of it, I get way more folks reaching out to me as a result of that than I do during the live presentation part of this. And I'd really love to see some of you show up to the live show so people can get the benefit of your question in the replay themselves when they watch it later. I'd much rather have a question come up that we can answer in sort of this group setting, so that then that answer's there, right? Anyone who watches it gets an answer right there while they're watching. Just because the goal here is to leave you with more knowledge on the table, right? And given the way the market is right now, being more savvy about how this stuff works, I think I always think it's extremely important, but I think particularly right now for buyers, right? The ability of your agent or you to negotiate well or understand all the various elements, right? It amazes me how we try to keep this so antiseptic or antisocial, I guess maybe is a better word, where everybody wants to do everything through digital signatures where parties never meet. And I get the psychology there. Definitely in a negotiation, it's probably in most cases not a great idea to have the buyer and the seller meeting for a variety of reasons. You want to kind of keep that neutrality. You don't want to invoke an emotional negative response. So in a lot of ways, it's better to simply not have those two parties meet. It's much better for a seller to hate the buyer's real estate agent than for them to hate the buyers, right? Simply because you don't want to build in that bias. But understanding what the seller's motivations are, why are they moving, where are they moving to? You'd be amazed if just applying a little creativity to the negotiation process, how I've managed to make a deal work. I know for a fact deals I've done over the last few years where numbers have been so against buyers, where it's been such a strong seller's market. I know for a fact I have gotten offers I've submitted accepted even when my offer wasn't the highest offer on the table. So just keep that in mind. And I've had that be everything from one of the people who was a seller was a super classic car person, and my buyer happened to have a father-in-law who was a mechanic and happened to have like a classic car that he was looking to get rid of. And they simply made that part of the deal. And that interesting connection, have no doubt sold my offer that we submitted on that property. But you have to figure things out, right? So in a lot of ways, it's also about being observant when you view a home. One thing I don't understand is real estate agents that will send their buyers to an open house and then make an offer without ever having been inside the house. You can learn an awful lot by walking around in someone's home about things that they are drawn to by what they have in their home. You know, what are the things they have in their home? And oftentimes you can't tell that by looking at the photos. What kind of books do they read? What kind of mementos do they have around the home? What are the things that they value? And oftentimes the negotiation doesn't just come down to what are the terms and conditions of your offer, but are you offering something that's super unique in a area that they love, right? Whether it's running, or maybe it's classic cars, or maybe it's sailing, or maybe it's equestrian stuff, right? The people who are interested in horses. And that's a lot of stuff down here. I mean, with San Martin, where virtually every property in San Martin is a horse property, that's a big deal, right? So this trend towards disconnecting from the physical reality of what you're talking about, I don't think is good for anybody. I don't think it works for clients. I don't think it works for agents. But we also live in a world where agents, the mantra of the current agent is to scale, right? We want to scale our business. Well, the translation, that to put that into terms everyone understands, that translates to, I want to have more clients. That's it. I want to spend less time with more clients. And that equation doesn't work. You cannot, if you're an agent who's selling your services as an individual, there are only so many hours in a day. So if you're taking on 300 clients a year, do the math and figure out how many hours you're spending on each one of those clients per year. Because it's going to be a relatively small number, and the quality of the service is going to suffer. It's impossible to evade that problem. So, all right, we're just creeping up on 2 minutes till the official live stream starts. I see I've got a couple of folks. I think I see someone who is in one of the venues where I can't see your... Yes, I have a couple of folks on the platforms where I cannot see your comments. So if you'd like to make comments, if you'd like to ask questions, you're going to have to head on over to either YouTube or Facebook to do that. So I appreciate you coming around. If you just want to sit back and listen to the show, that's great too. But of course, it's one of the things that makes it valuable is being able to have questions come in from folks all over and then have us work on those. I'm going to go ahead and back away from looking at all these. I've kind of lost, I've run out of time in terms of finding new articles for us to talk about. Boy, I tell you, more dumb articles come up on Redfin that are just obvious click. They just want to generate that engagement, even though the quality of their engagement is so low. Yeah, there was a time when I would read every single thing that got put out by Redfin. And in addition, I usually put about an hour and a half to 2 hours a day into reading real estate related content from a variety of platforms, just so I can tease out any interesting stuff. Man, but I tell you, Redfin fell off the list just because it was such a slog. But we do have some interesting stuff today. All right, we're 30 seconds away. It's about to happen, folks. So what we're going to do is I'm going to go ahead and go to the big face. So I don't know. Maybe this would be better if I just didn't have my face on here at all. All right, folks, welcome to it. We are just about to kick off here. We're just literally like 10 seconds away. I want to welcome everyone from Facebook, YouTube, Twitter, LinkedIn, who are partaking in this month's Coffee and Real Estate. I hope you've got your favorite brew with you. I'm not a coffee person per se. For me, it's just a caffeine delivery system. So I do mine as a mocha. But I do grind my... I mean, am I enough of a coffee snob since I, grind up my own beans and all that stuff? All right. Good stuff. All right, we are there. So thanks for coming this morning, folks. I appreciate you spending your Saturday morning with me. We've got some good data for you. For those of you who are new, my name is Robert Whitelaw. I'm a licensed real estate broker right here in the state of California, and I've been serving Silicon Valley since 1988, if you can believe that. And I've over the 30 plus years I've been doing this, I've lived in and served, Palo Alto, San Jose, went to Lynbrook High School, went to San Jose State, so definitely a local boy. And ready to help you reach any of your real estate goals, whatever those might be. And at my website, soldbyrobert.com, I have great tools for buyers and sellers. Or if you're not even a seller, let's say you're just a homeowner. I'd prefer to call it a homeowner tool simply because let's say you plan to never sell your home. I've got a great tool on my website. It's right there on the front page on the left side at the top. Just put in your address. You'll get an instant home estimation of the value of your home. But in addition to that, what the real amazing thing is the tools that come for you to evaluate how much equity you have, things to do with your equity. A really great tool, so feel free to check that out. All right, so let's go ahead and jump in. Let's see. We had some weird things happen with my presentation software last time, but let me see if it's still functioning. So as we usually do, we're going to go ahead and start off with total homes on the market, and we are comparing Santa Clara County to San Jose to Morgan Hill to Gilroy, and it's really sort of a exercise in understanding scale. Obviously, there's a lot more things going on in the county in general than in any of these other cities. San Jose is the largest city in Santa Clara County, so that's one reason why we use that. But let's just go ahead and jump in and take a look and see where we're at. Now, this is year-over-year changes. We're going to take a look at what's happened just month to month later in this presentation, but for right now, we just want to find, because we want to eliminate all of the seasonal influences, right? So we focus, let me just turn this off. Or maybe I can't. All right, I guess I can't. So what we've got is Santa Clara County is down 12% from the same time last year. We have 928 homes total on the market. And when you think about the total homes on the market, just think of that as the number of homes that buyers have to choose from or that sellers on the market are competing with. That's really what that number is. It's just the number that were available in that month. And this is January of 2023 versus 2022. And we can see last year we had 1,055. This year we had 928, 12% decline. San Jose saw a 16% decline, 424 this year, 505 last year. Morgan Hill saw a 17% drop with 46 homes last year, 38 homes this year. And Gilroy saw a 38% drop, 71 homes down to 44. So an important thing to sort of keep in mind here is these are really, really low inventory numbers. And when we compare them to last year, even last year's numbers were extremely low if you look at it from a historical standpoint. Next, let's take a look at the total number of new listings. These are homes that went on the market, and these numbers are interesting, particularly for the county at large, where we've seen a dramatic increase in the number of homes that were added to the market in January. Now, January and February over the last 4 or 5 years have absolutely been months when we've seen new homes just jump onto the market, but it usually isn't the peak, right? It's a big jump from December and November, but this is sort of a number that ramps up over the next few months. So the fact that we've seen this level of increase from the same time last year is actually encouraging. Also remember, though, that January of 2023 was still in March of 2022, we had the big interest rate increases, right? So, and it had just started. By the time we got to November, December, January of last year, 2023, interest rates had really hit their peak. We were at like 8%, right? And we're not that far away from it now. But just keep that in mind. It was still a very new thing, and I realize we've seen some increases in willingness to purchase on the part of buyers, almost just out of resolution, just deciding, all right, whatever, these are the rates that we're going to have to deal with, and jumping on board. All right, but let's go ahead and jump in. We had a 35% jump in the county in terms of new listings, which I think is great news because we've been nowhere near a balanced market in terms of available homes in a while. But it's from 750 homes last year to 1,010 this year. That's in my book, that's a good number. In San Jose, on par with the county, it was 33% increase, 389 last year in San Jose, 517. This is an interesting one. Morgan Hill has had a big problem with low inventory, and we've seen a 56% jump from the same time last year in terms of homes that were added to the market. So these are all homeowners who decided, I am now going to sell my home, and went ahead and put it on the market in January. So 27 last year, 42 this year. So a big jump for Morgan Hill. Gilroy flat. You know what? Let me get my ugly face out of the way here. So you can see those numbers. There we go. So 33 last year, 33 this year. No change. So interesting to note that in Gilroy. Gilroy is an outlier in a lot of different ways. We've talked about in past live chats and also in some of my podcasts about Gilroy. I think Gilroy still represents excellent value for money in terms of what you're going to get trading money for a home, the quality of the home that you're going to get. Next, let's see here. Let's see what we get here. This is going to be total number of homes sold. And let me, where did I put those numbers? Here we go. Let's look at homes sold here for a second, because I think that there's an interesting comparison to make when you're looking at homes sold. Because we want to figure out, did we add homes? Did we sell more homes than we added, right? That's sort of the math that we want to figure out. But first, let's talk about the changes. Now, in Santa Clara County, the total number of homes sold increased 19%. So it was 509 this year, 427 last year. San Jose was up 25%. 221 homes last year, 277 homes this year. And Morgan Hill, and this is a crazy jump for Morgan Hill, but also keep in mind it has far more to do with inventory than anything else, right? If we had had the increase in homes listed last year, remember we just talked about how many homes were listed in Morgan Hill. It was a 56% increase from last year. If we had had the same inventory numbers last year that we do now, we would have we would have had the same kind of result. But so here we've got 27 homes that sold in Morgan Hill. That's a 125% increase from the same time last year. So just a dramatic jump in terms of sold homes. In terms of what Gilroy saw, we had a 14% increase, 21 homes last year, 24 this year. And given the small sample size, I'd call that a wash. I wouldn't say, let's call that a 14% jump. I'd say that's, just because the sample size is so small, I would say that's a relatively flat number from the same time last year. But what did this result in terms of homes sold versus homes listed, right? Now, if we look at new listings in the county, we had 1,010 homes listed in Santa Clara County in January. We had 509 homes sold, right? So we listed 501 more homes than we sold. And that's true across the board. We added 501 homes to the overall inventory in Santa Clara County. We added 240 homes to the market overall in San Jose, and we added 15 homes to the market in Morgan Hill, and we added 9 homes to the market in Gilroy. So in all cases, we weren't bringing down overall inventory numbers, we were increasing them. And my guess is, as we move through the year and get into the hotter season of 2024, this is going to flip, and we're going to start to see us selling more homes than we're listing. Next, let's take a look at months of inventory. Months of inventory is an interesting one. If you consider what the national numbers say, a balanced market is somewhere between 4.5 and 5.5 months, somewhere in that range. I think we kind of live a little lower, right around 4.5. But this number alone, if you were just to look at this number, this would indicate a strong seller's market, right? And what this reflects is if for the month of January, you sold the total number of homes on the market and you froze the total number of homes that sold in that month and divide the homes sold into the inventory, that tells you how many months of inventory you have. And that's what we're seeing here. Last year, it's a 28% decline from the same time last year. We had 2.5 months of inventory at this time last year, 1.8 months this year in Santa Clara County overall, which pushes us more into theorizing that we are still in an extremely seller lopsided marketplace. And I think the increase in inventory we're seeing here is not going to push this number up. I think that if we could get a huge increase in inventory, and the inventory increase would have to be relatively large, this might start to go back up because you might start to see the supply actually exceeding the demand, which is really the equation we need to keep in, right? I know we talk about a lot of complicated numbers and try to figure out what the psychology is behind different buyers and sellers, but the reality is it's simply a supply and demand argument, and the demand far exceeds the supply, and that's really the bottom line. San Jose saw a 35% decrease in total months of inventory. Last year it was 2.3. This year it's 1.5. Morgan Hill, biggest drop. Look at that. We've gone from being the highest one last year to the lowest one this year, which is interesting. 3.8 months last year. That's a 63% decline to this year of 1.4. Gilroy saw a 47% decline with 3.4 months last year at this time and 1.8 months this year. So it's really, and again, that's another thing about the Morgan Hill market, and there's more interesting things about the Morgan Hill market as we move through this. Next, let's go ahead and let me just scroll down a little bit here on this side. I have some like more interesting data hiding over here that's in an unsexy looking non-graphical setup. So that's why I'm sharing it this way. Now this is pending contingent homes. So let me explain what that is. There's different milestones, obviously, in the sale of a home. This indicates that in the month of January, how many sellers accepted an offer, meaning that in the multiple listing service, a home went from active and available for sale to pending or contingent. Pending or contingent just means that the buyer has a period of time to do research on the property to decide if they want to go through with the purchase. And that the reason why that exists is they can back out of that transaction if any information they find is something they don't like and it's covered by the contract, right, in terms of their rights to inspect and all that kind of wonderful stuff. They can back out of that deal without any penalty, without any financial penalty. If you sign off on all contingencies as a buyer and then you decide to back out of the deal for whatever reason, you would then have to pay up to 3% of the purchase price of the home, which usually is at least the earnest money that you put into escrow when you got your offer accepted. So with that put aside, the reason why we care about this number is it indicates what we're likely to see in the following month or two. If it's a big increase, well, if you have more pending sales, you'll probably get more sales in February and March, because remember, it can take 30 to 45 days for these to close. So obviously those ones that take 45 days won't show up in the following month. They'll show up in the second month after that month. So, all right, so 27% increase. And this is just another great indicator of how many people were looking in January that ended up making an offer that got accepted. So it tells us what was happening in January in terms of buyer activity and willingness to make offers, but it also tells us what we might expect to see in terms of closed home sales in the following month or two. Up to 651 from 511 last year in Santa Clara County for a 27% jump. San Jose, right at the exact same ratio, 27% increase, 293 homes last year, 372 this year. Morgan Hill, dramatic jump, 65% jump from last year. 17 homes went pending last year in January, 28 homes this year. Gilroy, plus 9%, again, a wash in my mind, which indicates to me that we'll see relatively flat homes sold numbers as we move through with Gilroy, but we're going to see some big increases in the total number of homes sold. Not big increases, but I mean reasonable increases in the total number of homes sold in the county, San Jose, and Morgan Hill as we move forward. Next, I think we got homes sold here. No, I'm sorry, we already did home sold. Average original list price. Original list price. Almost no one else reports this particular chunk of data. And let me explain what this is. The day that homeowner signed the listing agreement where they spelled out what the listing price was going to be when it gets entered into the MLS on that very first day, that's what this number is. This isn't necessarily what the home sold for, because after this fact, home prices might get reduced, home prices might get raised. But this calibrates us to the psychology of the seller. What were they expecting their home to sell for on the marketplace? What did they think they could get? What were they willing to throw out there as the number that they would accept for their home, right? And it's interesting to look at these because it's about the mindset. And we're going to see, again, a weird Morgan Hill thing, which happens more frequently in Morgan Hill than almost anywhere else. Santa Clara County overall only a 4% increase from last year. So sellers were only expecting in Santa Clara County on average about 4% more than they were getting a year ago. So a year ago it was 1,759,000 in the county. This year it's 1,830,000. That's a 4% increase. In San Jose, we saw a 5.6% increase. It was 1,272,000. This year, it's 1,344,000. In Morgan Hill last year, 1,408,000. This year, 1,754,000. Now, you can say, wow, that's crazy. It's a 24%, almost a 25% jump from the same time last year. But because of the sample size, you also need to look into this a little bit more and realize that one of the things that's happening in Morgan Hill that's interesting is that activity at the higher price points, the more expensive neighborhoods, is also increasing, which obviously would make this a little bit more lopsided. So that wasn't happening as much a year ago. So the trend to pull away from this isn't, it is a little bit, that Morgan Hill sellers are completely out of whack in terms of what they're expecting and the price for their home. It's more homes, more sellers at a higher price point in more expensive neighborhoods have decided to list their home this year than last year, which is kind of interesting, which may present an opportunity because usually at these price points, you see the greatest levels of discounts as sellers try to bring in more buyers who are potentially depressing the amount they can pay because of the interest rates that we're currently seeing. So this may be an opportunity for you to get a very good deal on a property that would normally be priced far higher than this, right? And usually in Morgan Hill, it's different for every market, but normally the dividing line that exists where activity starts to drop off is 1.3 million to 1.4.5 million, and then we start to see a drop off after that. Other areas, that's not the case. Palo Alto, very, very different line of demarcation. Where the average home in Palo Alto is going to sell for what, 2.5 million bucks. All right. Next, Gilroy down 1.9. So seller expectations on average in Gilroy are down, and Gilroy has over the past year been far better calibrated to what the market is really willing to bear than any other community. Last year it was 1,237,000. This year it's 1,213,000. When we get to what average homes are selling for, remember, this is all just psychology. This is all just what sellers want to get. Now we're going to talk about the reality of what are they actually getting in January as we review sales prices. So average sales price up 6.1% in the county overall. So 1,631,000 last year, 1,731,000 this year. When we compare that, because I want you to think about this as, okay, if this is what they were getting in January, how does that compare to what their expectations were? So it falls below expectations because remember, expectations in Santa Clara County were 1.8 million. So how many dollars off of expectations was this? Well, it was just shy of $100,000 short on average of what sellers were expecting. It was $99,198. So and again, these are going to be some interesting numbers here because not all the cities are this way where expectations were completely out of whack on what they ended up getting. San Jose, 7.4% increase in sales prices from last year. Last year it was 1,294,000. This year it's 1,389,000, almost 1,390,000. How did San Jose do? Did they meet expectations? Not only did they meet expectations in terms of average original list price, but they exceeded it by $45,749. So on average, sellers were getting $45,000 plus above what expectations were in terms of sales price. Morgan Hill, 20.8% jump in average sales price. And again, what's interesting here is that buyers were willing to come out at these higher price points in Morgan Hill compared to last year. And look at where we were last year, 1,266,000. This year, 1,529,000, almost 1,530,000. So what's interesting is this is a neighborhood where, unlike other areas, buyers are willing to step up at higher price points. To have the average sales price be above what is normally considered that barrier where sales drop is very interesting. And in terms of what expectations were, still out of whack for expectations, right? We already saw expectations were nuts. So this number represents a $224,000 drop from what expectations were. So below expectations by $224,000. But again, remember what we were talking about in terms of some of these original list prices. was simply an increase in activity in some of our more desirable neighborhoods in Morgan Hill. Gilroy down 3.6% to under a million. Last year, 1,033,000. This year, 995,475 on average. And there are some beautiful properties in Gilroy. But again, I still would say that it represents some of the best opportunities for buyers to get into a home at some of the best possible prices that's still within a commute range of heading into Silicon Valley, right? Not awesome. I mean, it's not going to be great to have a 45-minute commute, but if you're doing the math, the cost of that gas is likely going to be okay compared to having to spend, what is it? On average, up in San Jose, if you wanted to do, you'd have to spend an extra $300,000, $400,000 to get in there for the average home. And the quality of the home you're going to get in Gilroy for that amount is going to be far better. So just something to think about. And in terms of you, if you're an investor, I'm all about helping folks try to make that first smart investment. And if you're someone trying to buy for the first time, I'm not even sure I'm pretty sure, I'm sure that I wouldn't start with a single family residential unless that's absolutely necessary. I'd start with a duplex where you live in one and you rent out the other one. And then at some point you can buy that single family residential for you to live in, or you can buy the next duplex or quad so that you're continuing to build your real estate empire. Okay, next. Where are we at? I think we're percent over and under asking price. Let's go ahead and check that out. So this is an interesting number. And again, Morgan Hill has an interesting standout change from last year. This represents when properties finally sold, how much did they sell above or below the asking price at the time the offer was made? Because that's what this represents. This is not based off of the original list price, which was what the aspirational number was for sellers. This represents what buyers were willing to pay above or below asking price at the time they made the offer. So if a home was originally listed for $2 million and it had a price reduction down to $1 million, this percentage relationship exists with what the price was at the time. So with the $1 million number, not the $2 million number. So as we can see, last year, just under asking price in Santa Clara County at 98.9%. So 1.1% below asking price. We have a 3.6% increase in that number to 102.5. So 2.5% over asking price on average in Santa Clara County. Now, again, remember, similar financing things were kind of in play. Now we've had lower numbers. They try to sell it as good news, but the difference in terms of what the interest rates were is relatively small, at least small enough to not fully explain why folks are willing to spend 2.5% above asking price in some of these properties. In San Jose, we saw an even bigger jump, 4%. It was 99% last year, 103% this year. So again, buyers willing to offer 3% over asking price to get these deals closed. And just to give you some context, so it wasn't that long ago, literally just after COVID started, I helped a couple buy a property where if you weren't offering 10% above asking price, and we had homes that were selling that were 10, 20, 30% over asking price, which is insane. We managed to finally find a place that would work for them where they didn't have to do that. We paid relatively close to asking price, frankly, and it was a multiple offer scenario. But again, it's one of those ones in the pre-show where I was discussing ways to approach making offers and really building a rapport with a seller by connecting with their interests. That I have no doubt that, in fact, their agent specifically called out that was a big deal for the seller in that case. All right, Morgan Hill, 2.1% increase, and I realize it's still below 100%. And I believe that to be a reflection of the fact that at that super high price point that I talked about before, where I was talking about being able to get discounts on properties at that higher price point, once you get over $1.4, $1.5 million, that is a reflection of this. Because we've had that higher activity at higher price points where it tends to be softer and you don't see multiple offers. So that's why I believe we're at 99% in Morgan Hill. We were at 96.9% last year at the same time, for a 2.1% delta between those two periods of time. Gilroy, down only 0.2%, so small enough that I would call this a wash, but 99.1% last year, 98.9% this year. But it definitely reflects an environment where buyers are able to go in, find a home that they potentially really like, and not have to compete with a dozen other buyers for that property. Now, of course, this is all going to depend on markets, the sub-markets within Gilroy. If you're trying to live right near where Christopher High School is, probably a different scenario for you than anywhere in the broad areas of Gilroy. But if you're looking at some amazing neighborhoods in, say, Northeast Gilroy, where you've got sort of these little mini estates with multiple acres, that's going to be a higher price point property, but you're also going to have much more leeway in terms of being able to come in with a lower offer on those. So it's something to think about if that's the kind of property you're interested in. But the neighborhoods around Christopher High School, some very young properties, some older properties, but the older property trade-off is you usually get a larger lot with some of those, but beautiful homes. I mean, some amazing properties. And I know that I've recently talked to a lot of folks who are just not in the mood for a two-story home. There are some great one-story options in Gilroy, so something to think about. Next, let's talk about days on market. How long has it taken to get things sold? We can see that in Santa Clara County, the number's down 20%. It's gone from 35 days to 28 days. And I'll be honest with you, what you tend to see in January and February tends to be slightly bloated. Because as we start to see buyers come out at the beginning of the year, you end up selling off properties that stuck over the market, that got listed, say, in late October, November, December, that didn't sell because buyer activity dropped. And then obviously the days on market just accumulates over those period of time. So normally what we see is a spike in January, February, March that simply represents buyers coming out and buying up all the homes that have listed, plus homes that have been on the market longer. And we will see that in the coming months. I'm willing to bet money on that one. But anyway, 20% decline from the same time last year, 35 days last year in the county, 28 days this year. San Jose, 33 days last year, 27 days this year for an 18% drop. Morgan Hill, 48 days last year, which was just driving sellers crazy, for 34 days this year, down 29%. Gilroy, down 9%, 32 days last year, 29 days this year. And something you've probably noticed with Gilroy is things have just simply been more stable, right? We aren't seeing the giant fluctuations. Things have been relatively flat, with a leaning into things becoming a little bit more beneficial for buyers. But, you know, I'm someone who I'm not offended by a community or a market where things are tending to stay a little bit more stable, where things don't fluctuate. And Gilroy has kind of lived up to that over the last year or two, actually. Next. Now, I've added some lines to this one, as you can obviously see. I wanted you to be able to clearly see the same month in past years. I had a comment from a watcher of a previous Coffee and Real Estate that said, hey, you know, I'm having trouble really seeing how it should compare to past years. So this is January of 2024 is obviously at the far right. And then January of 2023 has a red line, and January of 2022 has a red line. And it's a way for you to see what is the trend as we led up to January, and what was the trend directly after, so we can see if we can come up with any reasonable expectations for predicting the future. All right, so this is total number of active listings. As you can see, in every single case, there was an increase in the number of listings in January. But I would argue that maybe December 21 to January 22 was a little bit more dramatic, but that's a pretty dramatic jump from December to January of 2024. So I'm encouraged by that. We had a very low bump in 2023 in January. And I think that was simply with what was going on in the market. We had sellers who were like, you know, if I'm going to become a buyer after becoming a seller, I don't want to deal with these interest rates. And there was just a lot of hesitancy to jump in and get into the marketplace and get more listings on the marketplace. I think that's a reflection of that number. But this is a good thing to see total number of active listings increase. And I'd love to see this continue to increase on par with what we saw in 2022. Look at how anemic that increase was in 2023. A whole bunch of what we're facing today is that anemic scenario that we saw in 2023. Look at that. We got like a little bit of a bump in September and October, where we should have gotten it in June and July, which is obviously the peak months, right? By the time you get to September and October, folks are already done, right? You didn't get any of that in 2023. And you can see we also got it in 2021. So I'm hoping that we get the big boost this year that should happen when you're starting off in the selling season. Now, if we add to that New listings, and that's what the green bar is. Look at that jump in new listings. I would argue that that is even more dramatic than we saw in 2022. Very much and 2023. So I think we're seeing a number we haven't seen in a few years in terms of the number of properties being added to the marketplace. I think that's good news. I think all of us, and I don't think you sellers need to panic, because while this is extremely good news, and it may cause the market to pause a little in some areas, not pause, but sort of stabilize, I don't think this means suddenly your house is going to sell for less this summer. I don't think this outstrips demand. I still have so many buyers that have running searches, and that's something that I think is good to mention, is that in terms of ground truth, I probably have about 400 and something people with searches running. Of those numbers of about 400, I have a much smaller subset that checks them every day, and I can see when they go and they look at a listing, when they favorite it, or when they trash it, or when they put a comment on it. Obviously, that gives me an indication of the level of activity of that potential buyer, and which tends to be an indication of how serious they are. So out of those 400, I've got about 70 to 80 that fall into that. They get updated every single day via email that there have been new listings added, or that listing statuses have changed, or prices have changed, etc. And then they go and they look and they browse the properties. So that's a big number of people. I've had larger and I've had smaller, but it's been very large for a while. And that number does not, and to me, indicate that this number overcomes that demand, right? So I think we still have some crazy demand there. Now, if we add homes sold, we can see that it's always a decline in January, right? But we didn't have as big of a decline, right? If you look between December and January, that decline is relatively small. Look at how big the decline was in 2020, between 2021 and 2022, and then the decline between December 22 and January of 23. I think that's interesting, right? It wasn't as big of a drop, is my point. So I think that stays healthy. And then normally, look at that. It's like crossing a complete transitionary phase where in that month of January, the very next month represents a big jump in the total number of homes sold. Now, because of the pending numbers we're going to see, and let's just bring those up so we can see them. Look at the pending number jump, right? And we can see pending jumps in all of these others. And this pending number isn't as big as maybe we've seen in some past months, but because of the relatively mild decline in sold homes, I think that still spells good things for us. I think we see an increase in the number of homes sold next month, so I think it's going to do the exact same thing that we saw last year, with an uptick in the number of homes sold between January and February. So I think the February number will be interesting to see in terms of total number of homes sold. But this all indicates to me we're going to have potentially a much more robust selling season than we did last year. And that's not a hard bet to make. I mean, we already saw how low the active inventory numbers were last year, which were really flat during what should have been the peak of the year. So I think this spells for us a return to a little bit more of a normal marketplace. But here's the other thing that's interesting. Based on the questions I'm getting from sellers, there are more people out there that are in a position where they need to sell. For the last few years, it has been an option. Do I want to sell? I think because of a lot of challenges people are facing, they are interested in potentially considering selling because they have to, not because they want to. So that may be a bigger influence in some markets here. I mean, even if the percentage of sellers who find themselves in that bucket are only 10%, that's a huge number of sellers. So something to keep in mind as we move forward, because I think the urgency level gets stepped up a notch in 2024 in terms of sellers. Same thing here. The red bar simply represents a delineation of year or the month, right? This month in past years. And so in January of 2024, we're basically laying out average list price, the original list price, what sellers' expectations were with average sales price. And we can see that they went away from each other. Average sales price was way below original list price in December. But check that out. Sales price is making its move back up to meeting expectations. And it's interesting to note where we've had instances where sales price exceeded expectations for that month that we've seen in past years. But if we look at trends leading up to January of 2022, we saw list price kind of go up, but we saw sales price go down. Opposite thing happening here, right? We're seeing sales prices going up. If we look at January of 2023, again, average sales prices rising with a mild rise in expectations. So if we're trying to figure out where is the market going to go in February, well, if we look at 2023, average sales price dropped. If we look at 2022, it went up. My guess is because of the elevated activity we've seen at higher price points and the willingness of buyers to buy at those price points, I think this potentially goes up. I think we see more of a 2022 rather than a 2023 thing happening. And I'll be honest with you, I think that February of 2023 number was a little off. If you look at the slope of the line, that's a weird downturn there. So I think if we were to continue that smoothly from January on to March, I think that's kind of what we're going to see in 2024. Okay. Percent of asking price over time. We can see we peaked back in March of 2022 at 115.3%. 15.3% above asking price on average in the county. That's just nuts. Things have been much more mellow in 2023, where things remain flat, where we sort of peaked at 104.9, so 4.9% over asking price. And I'll be honest, I thought that once we got into October, November, December, we would drop below 100. Did not happen. And I don't think we go down from here. I think the only direction from January, if we look at January of last year, look at that. We had relatively flat performance up until November, December, and then January we took a big jump and we peaked in March. So just a couple of months after that. And it's interesting to note that so many people don't get that this kind of thing is happening earlier in the year. So that's March. It's not June. It's not July, right? When we totally have historically associated with the peak of the year. In terms of getting over your asking price, over the last couple of years, the peak month has been March. So something to keep in mind. I have a listing coming up in March, for instance, which I think is going to be timed perfectly for the kind of market we're going to be seeing in Santa Clara County in 2024. So I think this number goes up. I think we start to see this ramp up, maybe not as dramatically as in 2022, but it wouldn't surprise me if it was close to being on par with that. I don't think we'll get back up to 115. I think we may be back up around 107, but it's not. I don't think it'll reach 115 again. But we'll just see how things go from there. Next, we've got days on market. Now we can see that we've got completely different data, right? Back in 2022 in January, we had days on market drop between December and January. In 2023, we had days on market jump from December to January. And this year we had it again jump. Now, jumping at the beginning of the year is not something I worry about. I think it is a normal thing to see days on market jump. You head into winter, the demand in wintertime tends to drop, and then when the demand returns at the beginning of the year, you end up selling off homes that have been on the market longer, like 30, 60, 90 days total. You'll have those kinds of homes that were listed in, say, September that simply stuck on the market for all that time, which then drags the overall days on market up. So it's very normal, I think, to see January, February numbers up there. And then once you've sold off these properties that have been on the market longer, that's when you see the dramatic drop, which is what we saw in 2023. Less dramatic in 2022, but again, also keep in mind the profoundly depressed buying attitudes that were going on because of the interest rate situation, which is that. So in 2022, it's the after March numbers that started to jump, right? Which explains that. But remember that before March, we didn't have those crazy interest rates, so that's why those numbers are so much lower there, right? I hope I didn't confuse that in my head or confuse you. Next, let's go ahead and take a look at what numbers we're seeing in terms of how many homes have had price reductions in the month of January. Last month in Santa Clara County overall, it was 13% of homes had a price reduction. 11 homes this month. That's a 43% drop from the same time last year. And I think it is very representative of what we're seeing overall. Far fewer homes are having to have their price reduced in January simply because they don't have to. right? They have usually what happens is you've been on the market for a month or 2 months or whenever that window of time is, and you decide, obviously, we need to make a change. I got to sell my house, so I need to make a change. The only thing you can really change, aside from tweaking marketing and other things, is reducing that price. And when you do reduce the price, it obviously ends up kicking off a whole lot of new alerts to people who are subscribing. So suddenly more people who weren't seeing your home before because you were priced above their max are going to see it. And people who were originally alerted to the availability of your home will be told, hey, this home you were interested in has a price reduction. So it just increases that activity. Far less of that happening. It doesn't need to happen. Remember, in past months, we've talked about, in Gilroy's a perfect example, where 20, 30, we had several months last year where it was 50% of homes had price reductions, right in Morgan Hill. San Jose, numbers 12% this month, 13% last month. That's a 46% drop from last year. And then look at Morgan Hill. 13% last year, and Morgan Hill is one of those communities where at its peak it was having almost 50% of homes on the market had a price reduction. Only 3% this month, a dramatic drop, down 93% from the same time last year. And Gilroy, still showing more price reductions, even though they've tended to be more calibrated. This tends to also indicate that homes are staying on the market longer, because when you're on the market longer, you have to reduce your price. 29% last month, 20% this month. So not a huge drop, a good drop, but it's only 10% off from last year. So the amount of time they've had to spend reducing prices has actually remained kind of within a very narrow band for a long time, whereas in other communities, they've had a complete drop off in the number of price reductions that they've had to embrace. Okay, so that covers all of the numbers that I usually share. If you've got any questions about that data, feel free to ask now. I am checking the comments in both Facebook and YouTube and LinkedIn. So feel free, any questions you might have, I'd be happy to give them a shot. In terms of other things, if you've got topics you'd like to cover that we don't normally talk about, I'm happy to do that too. Let me just change this over and we'll hit some of the news items. So, if at any point during these news articles that we're going to hit, you have a question, feel free to jump in and ask a question there too. I'm going to put myself on the other side here. Okay. First, let's go ahead and hit interest rates. Freddie Mac mortgage rate climbs 13 basis points to 6.77%. So we're about a percent off from, I think, the peak of what we were seeing. But here's our chart. We can see that we're obviously not where we were here, right? Earlier in 2023 and here in 2020. And in 2022, when things started to take their jump, this is what we were talking about. So what does this mean for us? It has climbed, but it hasn't climbed enough that I think we see a huge dip in terms of buyer interest. I think this would only nudge buyers up or down in their searches a little bit. I would guess for the vast majority, not at all. They would simply try to negotiate away that issue in the purchase of the home rather than not consider homes at their current price ranges. In terms of housing starts, so this is one that I think is interesting to consider. Look at where we are. So each one of these little gray areas or bluish gray areas is a recession. And one unit structures, right? So single family residentials is the red. Blue is the 2 or more, so duplexes and higher, right? Multifamily. We can see that it's been relatively anemic, and actually it was super anemic back here in 2011, right? Which was normal. It was a natural response to a huge downturn in the recession. But we're nowhere near where we were, back before 2000. And that, I think, and most pundits, I don't think I'm blazing any new ground here. Most folks are out there talking about how this is the problem, that we're simply not building enough. And when we see approvals for permits and more construction happening, it tends to be less single-family residential and more multifamily, but not even the multifamily that would be interesting. So interesting would be a duplex or a triplex or maybe a quad. What we're tending to see is more 18 units, 16 units, hundreds of units, right? We're seeing more mass occupancy, tons and tons of apartments type of living, rather than something that feels like a single family residential or townhome that's just a multi. So like a 2-3 bedroom home that also happens to be connected to another 2 or 3 bedroom home in a duplex, for instance. We're just not seeing that style. And frankly, I think we're setting ourselves up for a bad market in the future because no one wants to live in an apartment. I'm sure most of us at some point, I know in college, I lived in an apartment, hated it. I think once I got out of an apartment, I never looked back. I never pined for the days when I lived in an apartment. I would prefer to rent a single family residential and get myself 3 roommates than live in an apartment by myself. It was just, I hated it. And it might have just been my experience, my very first apartment experience. When I lived up here and I was going to, I was at a local college here in Northern California, and for 1 year I went to Cal State Fullerton. And literally within the first week of moving into my apartment in Anaheim, the apartment above me got busted by the police for producing meth or something. But so there's like SWAT teams and stuff running through the apartment complex at like 10 or 11 o'clock at night. So that was my welcome to apartment living in LA. Plenty of other things happened in LA that made me not want to stay there. But and that was way back. That was way back before things got crazy as they are now. All right, so now it's time for a little coffee here. I can feel the need for speed. Okay. So this is housing starts. And again, just still anemic. We kind of already covered this. I don't feel like there's anything huge there. Next, mortgage rates shoot to 2-month high after inflation is still a thing. And yes, it is a thing. I know there's an awful lot of headlines that want to say it isn't, but it is. And you don't need me to tell you that, right? If you're out buying stuff, if you're going out to dinner, if you're buying groceries, you already know this. This isn't something I need to tell you. This isn't news. This is just the way things are, and it's the way we all see it. So just there you go. And one interesting thing. So my kids went to Mardi Gras with their mom, and obviously them being from California, all these various things, they were sharing price differences where they were buying a gallon of gas for $2.50 a gallon versus our $5-6 a gallon thing that we see here. Which is and then that's another thing, right? Something I didn't mention before in terms of the inquiries I get from sellers, people who want to list their home. The vast majority are leaving the state, right? Now, as I said, I've been doing this since 1988. I have sold an awful lot of houses over those years, and usually only about, maybe at the height, maybe 20% of people who were selling their home were leaving the state of California. I had many cases where someone was selling their house and buying a new one in the same county, so I'd help them on both ends. I'd help them sell their house and buy a house because they were buying and selling within the area I tend to serve. So I've had people, back in the 90s, I had people sell and buy in the same city. So it was a fairly normal thing, and all they were doing was downsizing. They loved the city, they loved where they were. They just didn't need. All the kids were out of the house. They didn't need a 5-bedroom house anymore. They only needed a 2-bedroom or maybe a 3-bedroom, more commonly 2. But my point now is that's completely turned around. Now 80% of the people I talk to are not only looking to leave the city that they're currently in or the county they're currently in, they're looking to leave the state. And all you have to do, and we've got some graphs I can show you here in a minute, or some maps that show you migration status things, that kind of thing. But that is an interesting dynamic. Obviously, there's some political elements to that. When I ask people why they want to leave the state, I get a variety of answers. But it almost always boils down to, I love the state. I love the physical state, but I hate the way it's run. And I'm concerned about what they're going to do to us as citizens of the state of California moving forward with different taxes. So they are, and again, these aren't always retirees. Maybe a little less than half of them have been, which is also a different number. It used to be when I saw someone leaving the state, it was almost 100% retirees. It was like people going to Phoenix, right? To Sun City or wherever they were going to go. I'm getting engineers from Google and Facebook who are out. They're done. They've managed to get a deal where they can work remotely, and the attractiveness of being able to go to the beach or going to the mountains or going to the desert or whatever just doesn't overshadow what they see as the downside. And so I've got 28-year-olds, 35-year-olds, under 40s leaving the state to live somewhere else, and some of them are giving up the job. They're. I had some that were going to like Charlotte, North Carolina, still keeping a tech job but moving to Charlotte, North Carolina. Anyway, so it's interesting to see the lack of satisfaction for folks who live in the state of California in terms of not being satisfied living here. And numbers I've talked about on my podcast are still true, where in Santa Clara County alone, in Silicon Valley, so broader, San Francisco all the way down to San Jose, Morgan Hill, Gilroy, 50% of residents want out of the Bay Area. That number's insane. The last time I remember even hearing it in the early 90s was somewhere like 8% or 10% of people had that kind of an opinion. And these people want out. The number of people who want out of the state on average across the entire state is a little lower. But our local area, and I'm sure with what's going on in LA, things are on par with what we're seeing here. But the last numbers I got, which are older, was 50%. I got to think that number's even higher now. We just don't have new numbers, right? All right, let's go ahead and move forward. So interest rates, 7.14. The average rate on a 30-year fixed mortgage jumped to 7.14 according to Mortgage News Daily. This is from February 16th, so just yesterday. Not stale at all. Mortgage rates hit their last high in October, but then fell sharply over the next 2 months, leveling at around 6.6. Again, I don't think these are numbers that are going to throw anything completely out of whack. We'll have to see how things go. If we want to take a look at a comparison with national numbers, this is from the National Association of Realtors. This is the week ending February. Median listing price was up 0.3%. New listings were up 9.5%. Active listings up 13.9%. And time on market is down 3 days. I think our market kind of reflects that. I think our actual this is list price, that they don't discuss sales prices. I think that median listing price increase, obviously we're outstripping that. Seller confidence in what they can get now is much higher than the national numbers. And now we get into some reports stuff. That's renting versus buying. Let's see. New home sales, median price. Well, that's crazy. Let's see here. Realtor median price inventory. Median list price map. Usually it does it by county, so let's see if we can. There we go. Now, if you've got any questions or there's any data you'd like me to sort of explore here, feel free to let me know. As we see here in basically our area, San Jose, Santa Clara County. Peak to current, and remember this is median list price by county. This is the change, a 9.45% change. And these are all the changes that we saw here over the course of each month. Pre-pandemic, 1.1 million, and we're 22% above that now. Let's see, active listings. And this is a good way to sort of get the national feel, right? We can see the negative numbers in terms of growth, positive numbers. We can see we've got negative numbers all through here, and then these areas are seeing all positive. These areas are positive, and here's an interesting county that's showing positive. Colusa County is showing positive inventory growth. Other reports, national trends, local markets. Let's see here. And we can see what median list prices are doing. We're obviously right there in some of the hottest ones. Median list price 1.3 million. Median list price year over year is down 4.2 according to this. I'm not sure what numbers they consult for this. Because and again, this is list price, not sales price. But that's not what I'm seeing in my data. Now, I check, when I run my numbers, I do all single-family residentials, townhomes, and condos. So I don't know if they're doing something else, some other mix. But that definitely isn't reflected in the numbers that I'm seeing. In terms of, let's see. I guess I have to do this. I let it sit too long. Let's do Bakersfield. I'm a home buyer. All right, so here we go. This is an interesting map, and this is one you don't have to pay for. This is reventure.app if you want to find it for yourself on the internets. But there's just two pieces of data you can get for free. One is home value and how home value growth year over year. And it does it by zip code, which is kind of cool. According to this, it's up 3.1% in Morgan Hill, up 4.9 in San Martin, up 4.7 in Gilroy. But you can go to your zip code and pull this up. It's really kind of cool. They've only got numbers as of December. They don't have anything for January yet. But this is a great tool. Whenever I'm looking for kind of historical data and I want to see where things are at, this can kind of give you some interesting insights into if you're someone who wants to relocate and stay in the area, but where can you go where let's say you've enjoyed some crazy home value growth, but you want to go to an area where it's maybe a little bit less than that so that you can kind of leverage being in a higher priced or a higher appreciation area into a lower. You could look at, say, if you're starting with 7.4, look for something that's lower, like 95125, that's only 4.9, or 95128. So it just gives you some interesting opportunities. East Palo Alto, 2.3, which actually they're including, obviously, part of not East Palo Alto. Let's see here. So I've got a listing coming up in this area that's in one of the older neighborhoods. It's like down here, right around here. And that 1.4 number is not right. At least I don't think it is. Maybe 95040. Yeah, and maybe I'm down here. Anyway, so this is a great tool for you, and it does it for the whole country. So if you're somewhere else and you want to get an idea of county by or zip code by zip code, you can also do by state. You can also do metro areas, which is kind of cool. But this is a great tool. If you're someone who just is interested in the geeky numbers stuff for real estate, I think this is a great tool. I'm toying with paying for this tool, but I've got another tool, my HomeBot AI tool that I provide to my home owners, I think, and buyers. I think actually is more up-to-date data. It's based off of my local MLS data, so I think it's a little bit more useful. If you're interested in that, I'd be happy to take you on a tour through it. I've done a tour of that on previous Coffee and Real Estates, but I don't, I sometimes I feel like I'm promoting myself too much when I give those kinds of tours. Now, if we take a look at what we're seeing in terms of today's fixed rates, it's 7.4. As you can see, it peaked out at 8.03 over the last 52 weeks, bottomed out at 6.16. So over the last 52 weeks, we're right there in the middle. So I don't think we're seeing anything that's shocking anyone at the moment. One other thing is that I wanted to share was Adam. These guys do great data, and they have probably the most expensive data on the planet when it comes to this stuff. But if we look at foreclosures, because there's been a lot of talk about foreclosures, I'm getting more calls from folks who are, I want to get a list of foreclosed properties. Yeah, the headlines you're seeing aren't really setting the right stage. So foreclosure starts are up, but foreclosure completions decline, meaning letters going out saying you're in foreclosure, you need to do something about it, are up. But the instances where those letters end up in an actual foreclosure is down. I have not seen a real increase in actual foreclosures where it goes to auction. These are getting resolved. Sellers are getting current. And sometimes the sellers are getting current because they're selling the property. But we're not seeing this dramatic jump. As you can see, historically, we're still at very low numbers. These are the numbers for 2023. Our peak, obviously, was 2009, 2010, with just a steady drop-off until we bottomed out in 2021. And have we seen an increase over the last couple of years? Yeah, not substantial. So do I suggest you not look at foreclosures? No, of course. If you've got a resource, a way to look for foreclosures, do it. And if an opportunity comes up, fantastic. But the reality is you're going to go through hundreds and hundreds of foreclosure starts before you find one that actually ends up in being an actual foreclosure. So you've got a very long wait and a very large amount of stuff to wade through before I think you're going to get anywhere. I think I had one other tidbit here I wanted to share. Yeah, here we go. States that saw the greatest numbers of foreclosure starts in 2023, and again, in California, we've got a large number of starts, historically speaking, just over the last few years, not over the last 20 years. But not a lot of completions, right? So California leads, Texas leads, Florida leads, New York leads, Illinois leads. But bank repossessions decline slightly, right? So that means that foreclosure notices went up, but actual repossessions declined. So just something to keep in mind. You know what? And let's go ahead and look at... let's see here. Let's go ahead. Let's do a real loan. just so you guys can see it. Loan search tools. I like to use Smart Asset. It's just an aggregated thing that'll go ping a lot of different lenders. Let's go ahead and do Morgan Hill. Let's say the target home price is, what did we see? The average was like 1.5. Let's do 1. Let's do 1.5. Assume you've got 20% to put down. This is, and we're getting very few options, right? So I wonder what it's interesting to, let's see if it, maybe it just doesn't like the high price. It doesn't want to be at that price point. Yeah, there you go. So you suddenly get more. So let's go ahead and round that up to 1.3 million. And as I said, see, and so much of this also, when we're talking a lot about where that line is between higher end or less traveled properties, a lot of this has to do with it, where certain lenders just don't want to play at certain price points. So if you're at 1.3, you're able to get, let's say, a 6.7 APR. But look at that. You've got a $9,000 fee, and then your mortgage is $6,659. And then you've got one from Empire where they credit you $1,000, which is kind of okay. And then that one's got $1,300 in fees. So you're trading a little bit there, one for the other. But that's kind of what we're seeing. And this also assumes that you have excellent credit ratings. If you have lower credit ratings, then you're going to pay more for that money. All right, folks. I think we've just about covered it. I am almost fresh out of coffee. I hope you all have a fantastic weekend planned. I've got lots of properties to look at today. There have been an awful lot of homes listed. So as I do a few times a week and almost every Saturday afternoon, assuming I don't have clients that I have to meet, I like to do a drive-by on some of these properties and then get into some of them. So I'm going to be doing that today. If you're interested in finding your next home, feel free to reach out to me. soldbyrobert.com is the site to find me. The goal here is to leave you with more knowledge on the table than I take up in your time, and I hope we've accomplished that. So have a fantastic weekend. Thanks for spending some of your valuable time with me, and I look forward to seeing you next month for March's Coffee and Real Estate Live Chat. Thanks, everybody.